Gio, it's good to hang out. Good to catch up.
We haven't done a one-on-one in a while,
We
so
haven't. I know. You're always wanting to talk to other people. It's good to just like take a break, keep it real. Although we do have you've done a great job at recruiting guests. I'm looking forward to our conversations coming up.
well, it was good because last year, if you remember, we got in trouble during the holidays because we looked up one day and we're like, we don't have anything booked.
Oh, probably. I know. I think you've got us out through January. Although
Yeah,
we are
uh,
recording the week of Christmas, so I was like, we just rescheduled Laura. I was like, Laura, you can bring eggnog to the recording if you want.
that's awesome. Yeah, she's on the 19th.
She's
And I think
Same with Emily.
it
Yeah,
was
she said she'll be in Connecticut with her. She said something funny about all her decorations. It sounds like she goes all in. So she said it'll be a festive background.
that's awesome. I hate that she's sick and had to cancel,
I
but I
know.
love that this means we get one-on-one time. And there's a lot of stuff going on right now, right? I mean, there's a
Yeah.
lot of headlines, there's a lot of buzz. And overall, my position is typically I take the high road, right? Kind of for like GWA and Juicy or any of my speaking stuff. I typically avoid the topic, but
No
in this
comment.
case, yeah. Well, it's just you don't know the details, right? But in this
Yeah.
case, with all the WeWork headlines, we're not going to dive into the details of what's going on internally at WeWork, but we do know the facts of they have filed BK, right? That's a
We do
fact.
know that you tried to get the CEO on the podcast and he said he was too busy.
Yeah. So I've tried. I've
I
tried.
like it.
So
I
WeWork,
like
if
it.
you're listening, we'd love to hear the insider scoop. But in the meantime, I mean, so we know the fact that they've gone BK. We know the fact that they've put out a list of locations that are closing. We know that there's a list of locations they're negotiating. I mean, we're working with some of the landlords that are trying to figure out which direction to go. They were given options. And if you're a landlord listening and you've gotten some of those, reach out to us. We're happy to help, in any capacity, have a conversation as to what we're seeing out there. So again, those are all facts. And then the facts that we also know is everyone's responding some way, shape, or form within the industry from an operational standpoint. Everyone's got an opinion, whether it be WeWork is doomed to this is just pivot and reset. They're going to give back space, kind of like Regis has done multiple times, 4+, right? They've gone BK, pivoted, reset,
Do you think
different
people in
situations.
the industry think they're doomed?
Yeah, I mean, it's been interesting to see. I posted a lot of articles. It's
Yeah.
funny. I just
You and
looked
your
at
massive following. Mm-hmm.
I just literally looked at my impressions because I took a little bit of time off and posting as much as I normally did, but I'm at 20,000 plus impressions this week. Uh,
I see.
and so it's crazy because it's everything to your question, everything from people that are like, yes, it's just noise, right? It was necessary to people. Literally, someone said I was crazy for thinking that WeWork was going to come out of this. And the reality is, obviously, my position, my opinion only, but they're too big to fail, right? I mean, at the end of the day, what it looks like and what it evolves, does IWG basically buy them? Does a private equity group come in and buy them? Does some other private group come in and buy them, or do they continue public? Those are really the options. But I
Yeah, I
mean,
mean,
they have.
when you say too
Right.
big to fail, I mean, you also mean that they have some assets that clearly are not working and they're going to get rid of those. And to your point, that's exactly what IWG did in 2000. And then again, when was their other kind of big, they do that twice? I mean, in
They just
2000,
recently did it. They just did it in
yeah,
the last few years,
it's
right?
been
And
right.
so,
And it's been a little more quiet. So I think, in 2000, it was a much bigger deal and it gave them the opportunity to restructure, and give back bad locations. Any portfolio is going to have locations that are not great, right? Any major operator is going to have locations that aren't working. And I mean, this one got to the point where they're going to have to shed. What percentage of their portfolio would you say? I saw the list. It was on CoStar.
well, it was 62 properties, right? I don't know what percentage that is because the size of the spaces really vary, but
Yeah.
also a lot of these spaces, I mean, they're basically giving the landlord a few options, either on the ones they want to keep or reprioritize or whatever we want to call it. is the landlord can take a reduced rent. The landlord can essentially take the space back
Yep.
or do some type of management agreement, right?
Yep.
And some variation of those things. And so the reality is, I mean, you're an athlete, I'm an athlete. I mean, we follow sports. So this is what I'm comparing it to, right? Is if let's call it NFL football team has a couple horrible seasons, what do? They basically step back and they get a new GM, a new coach,
Yeah.
new quarterback. They basically go into rebuilding mode, and that's what's going on.
They don't shut down.
No, no. I mean, in some cases, you know what? They even change owner, right? Maybe the ownership wasn't committed or wasn't willing to play the game, the strategy game that they needed to. And so that's exactly what's going on in this situation, right? Is when I say they're too big to fail, they've got a huge following from an entrepreneurial standpoint. They've got a huge following from a enterprise standpoint, right? I mean, they've got a lot of big names that they do business with. They've got great real estate. Do they have some bad real estate? Arguably even a lot of bad real estate, or locations that are too big, or deal structures that were not conducive to being successful. Yes, but they're going to clean all that up throughout this process.
Well, and also to be fair, I mean, I think some of it is, we just interviewed the GM for the US for Mindspace, and they made the decision to grow profitably. They're working on 50 locations. You cannot scale as quickly if you're worried about profitability. So WeWork's growth strategy was not based on profitable units per se, right? Not immediately. So Shai, essentially said they're scaling with cash flow, which is really hard to do. So really, really hard to do in this business. And they also were heavily impacted by the pandemic, right? Like, to your point, they have a huge enterprise competency, arguably, stronger than maybe any other brand, because they're so compelling, to the modern workforce. And they have built that competency internally to sell enterprise memberships, and then the pandemic hits. So they've got a lot of locations that were built out for enterprise use, and that demand has shifted, and so the Morris Levy, who's one of the co-founders of the Yard, posted 35 out of WeWork's 47 locations are set to close. Ouch. And he said, don't panic, please PM or call me. I mean, the reality is that not all of them are set up for takeover, right? Do you want to stay away from that topic, or do you want to talk about that a little bit?
No. I mean, we're advising on a lot of this stuff, and it's not just them, right? This is other operators, right? They just happen to be, Adam put them at the top of the list. They became the Kleenex of the co-working industry. Yep. And so there's been a lot of buzz, right? But there's other operators that are in the same situation, whether they had the wrong strategy because they were franchising when they shouldn't have been franchising, whether they were growing in markets they shouldn't have grown, whether it's some of them, I mean, in some cases they were acquiring their operators that overlapped and cannibalized their own locations. And so this is not a specific WeWork conversation, where in some cases there's been a pivot and a need to re-strategize, right? I mean, we had people Hana, when Hana started out, we looked at the Hana space that CBRE laid out, and you're just going, what in the world? This is a beautiful space, but it was all team suites, right? Convene, if you went to Convene's locations, they were large team suites. Yeah. A lot of the WeWork locations were team suites. You looked at IWG spaces, they were team suites, because that's the way the world was headed pre-pandemic. Then we went into the pandemic and everyone went in, and now we're trying to figure out what that looks like. So to your point, a lot of those spaces, unless you go back in and you make an 8-seater office a 4-seater, how do you make the numbers work? Unless you basically take a 50-person team space and put another $100 into it per square foot to basically reset it. Yeah. What do you do, right? And so that'll be the case on some of these is, you're going to have to put in money to, Regis calls it space max it, or, to adjust the utilization and efficiency. But a lot of them, it'll just be given back a floor of the 3 floors, or, 2 of the 4 floors. But there's, at the end of the day, people forget that this industry's been around for 30 plus years, right? This is the word co-working is a buzzword that's been used the last few years, but the reality is this model is tried and true, right? Through good times and bad times. Doesn't mean it hasn't struggled, doesn't mean it's pivoted and reset, but that's kind of where we are right now. Is we're in a pivoting and resetting of what people thought it would look like and what it really looks like.
Yeah, I think that's right. And I think WeWork did a lot for the industry. And I think there are operators who are today, I mean, there's some luck and timing involved, right? I mean, there are newer operators, some that you work with, Cato,
Yeah.
Fuse, who are doing really well, in sometimes suburban markets, which WeWork won't touch. But WeWork was moving so quickly that they're primarily CBDs in major markets, and there's a lot of benefit to their, international footprint, which I think will continue. They're still going to be the largest operator. I mean, who knows, unless somebody buys them. We'll see.
Yeah.
Yeah.
I mean, and part of it too, and let's talk about the aftermath of all this, right? Not only the conversations, but people, operators, landlords, lenders, how people have shifted and adjusted to this whole thing, right? So all the lenders are, now scared of co-working
Yeah.
slash flexible workspace because they've tied it all into WeWork. And so it's educating them on what the difference is and why this is not, the house of cards that's falling, right? So that's a big conversation. Then you've got the landlords that are realizing, hey, you know what, whether we want to do short-term flex or not, that's the future, at least the next few years, because even people that have 5-10 year leases that are expiring, what are they going to do? They're going to sign 1, 2, 3 year extensions while they figure out what's going on. So you're already playing the flex workspace game. And then the other side of it is all these landlords that thought, oh, we've got 5, 7, 10 year leases, so we're protected, have realized that those leases really don't mean anything if people aren't going into the office for whatever reason, right? If there's people that aren't utilizing that space, you may think you're protected, but you've got bankruptcy laws, and you got all kinds of stuff that has been an eye opener for them to realize, look, it's not as stable as we thought it was. We are taking risk. And then from the operator side, which is the biggest side that you and I work with, is really getting people to understand what all's going on out there from the standpoint of deal structures and space optimization and so many other things. But most importantly, right now, you've mentioned a couple of them already, right? People that are chasing these WeWork deals. And it's so difficult because they're getting calls. These landlords are getting calls from service providers, the brokers that are trying to get in front of these deals, right? Many of which you and I both know have no idea what they're even talking about. They're just trying to get in the way of deals, and great for them, but not so great for the operator and the landlord that basically are now being advised by people that don't understand what's going on. The second one is all these operators that, I mean, I'll tell you, and I don't know if I'm open to actually give names, so I'm not going to, but at this point, Expansive has hired someone and brought them in-house to help them go after these types of management deals. I think they call them asset light deals. You've got WeWork, which is based out of Chicago, that has hired a real estate in-house executive to help them go after these deals.
Wait, who? WeWork?
Yeah.
I have to look that one up.
You've obviously got all the major parties that you would the Industrious, the Serendipity Labs, Venture X's. I mean, you've got all these other groups that are actually going out and chasing as well. And so now it's, how does that play out, and what do you do? And so I think everyone's kind of shifting and adjusting to that whole bit. What conversations are you having from the landlord side and the tenant side?
I continue to think, from the landlord perspective, that maybe as operators, we assume that the landlords understand the model and kind of what's even happening. you and I worked on a project together with pretty sophisticated landlords, but they still didn't really know the business. I mean, they kind of knew the business model, but not the details, not enough to go through the options and evaluate them, right? And know that they came out with a good answer. And WeWork takes a significant amount of space. So for most landlords, the answer is not going to be, sure, we'll take over 60,000 feet of flex when we've never run it before. So that's not even, on the table. But I think, that it is still the case that, to your point, landlords are starting, I think there's just a lot of tension right now, right? Landlords are starting to see, okay, tenants want shorter term space, they want flexibility, but WeWork's over here, giving back space, but our customers are still telling us like, this is what we want. We don't know how to operate it. Can we get the banks to fund it? We're making some assumptions. I had an inbound email yesterday from a group in Michigan who said, we have 12,500 square feet. We want to partner. And I was like, they want a partner to run the space. I was like, okay, let's back it up. Is this right for flex? Like, what does the model look like? Do you have a pro forma? Like, let's do the process and then we'll, think about a partner. And I don't mean to, sort of, but I think people are still making a lot of assumptions about like, okay, let's flip it to flex, and thinking that's is maybe an easy button despite what's happening with WeWork. And then, to your point, there are other brands who are, giving back space. Landlords are just trying to figure out like, what the heck this looks like. And I think there's just been, it's unlucky. There's been a big shift pre-COVID versus post-COVID, but also we're still in this like waiting period, that enterprise demand could come back, right? Like we could still see people taking team suites, and some markets don't have that demand right now. I know when you look at a floor plan, you want to delete all the offices that are over 4-person and, keep it tight. And that's kind of the low risk way to do it, even though it's higher cost in construction. But that's a reality, right? Too, is I think the model's being challenged right now. You're always like, well, this model isn't dense enough, but people want hospitality. They want this great vibe. They want, potentially room for, team space, but they can't get it paid for. The landlords don't want to pay for it. I think the market is it's just in flux right now. There's a lot happening.
Yeah. And I mean, and you're even advising landlords that are considering taking this in-house, right? I mean, we've seen more and more of that. I mean, I had a conversation just this morning with a group in Dallas where the landlord literally took it in and they're running it themselves. You're advising a landlord in Phoenix that's looking at doing the same thing. And so, I think we have some of that going on too. And so it's just, we've got a perfect storm, in my opinion, of COVID, turmoil in the financial markets, socioeconomic turmoil to whatever extent, sociopolitical, and then you add this environment of the influx of how people are going to work and how often they going in and what product do they want, and enterprise users trying to figure it all out. And so I think it's just, there's a lot of noise and there's a lot of stuff going on at once, and it's kind of our role is to help people understand what's really going on and the actual conversations that are being had, not the social media, just general media conversations that people often don't know about, right? And so trying to advise people on that is challenging, but a lot of fun. It's very rewarding to help people understand, oh, wait, that's really what that means. And oh, wait, this is how we should go about it.
Yep. Yeah. Agreed. And even, I think another big thing is knowing your customer. Shai, when we haven't posted this, well, who knows if it's live yet. We talked to Shai from Mindspace, who was talking about just the differences between, their European members and their US members, which is very funny. We're going to London and Rome next week, so I'm looking forward to being bougie for a little while and coming back and being like, Costco's an embarrassment. Every time I go to Europe, I'm like, oh my God, Costco's so embarrassing. Everything's so big here. But what was my point going to be? Oh, culture. I was talking to another landlord who's outside of Boston yesterday. And their pricing was really low on their pro forma. And I was like, you guys got to charge more than this. That's why, they were not putting rent in as an expense, right? So their margins looked great. But I was like, let's drop rent in. Okay, your pricing's not high enough. And they were like, well, we live in, we have our properties in more of an affluent area, and our members, this is totally optional for them, was their view from the research they've done. So they're like, it's a discretionary expense. So there's a ceiling on what they'll pay. And so if I believe that they know that, and that's right, it's good that they know that, right? Because they got to model that way. And it's good that they've done that work, and they've done a bunch of work with Workplace Studio and Mara's team. So maybe some of that research comes from that. But yeah, you really have to know your market, and yeah, who's going to buy? And so then how do you design? But and then on the other hand, you've got Mindspace opening in downtown Miami, where like everybody, the co-working is like so on fire right now. And people, don't stay home. They're like out and about.
Yeah, and I mean, shameless plug for us, right? But at the end of the day, that's why people need advisors that understand what's really going on, right? And that's where you're able to step in and help operators that are currently running, landlords that have space they're getting back, to really understand, how to go about strategizing in a way that makes sense for the asset pushing forward, right? Because as I've told a couple landlords, I'm like, why would you do a deal with someone that you're going to get the space back? They haven't operated the space well up till now. What makes you think all of a sudden they're going to change? So why would you give them more money? Why would you give them free rent? Why would you give them, less rent? I would switch operators and have a better idea that you're bringing in someone new to the game and that is better aligned, right? So I think that's a huge part that you're able to advise with, that I'm able to help with, that most people don't really understand what's going on.
Yeah, the alignment piece is really important, which is right. Yep, hard to figure out right now. Yeah. What else? What else are you seeing out there?
Yeah, I mean, I think, as it ties into that, is how do we help people pick the right real estate moving forward, right? Is because that's a big part. Is there's two things that you can't change. You can't change the real estate. You can't move the location, right? You can, but it's expensive. And the second one is you can't change the real estate deal.
Yeah.
Right. And so that's the case that we're able to figure out, how do we keep other people from running into these issues again and again. Right. So, I mean, it's just interesting to be having some of these conversations. Is where are people trying to grow and why? Right. The suburbs, the urban cores, the markets overall, even take it even more macro, is, I've got calls from people in certain markets where I'm like, I would not grow in that market. Right. It's not the right time. Or the opposite is people trying to grow in markets where I'm like, good luck finding space in Fort Lauderdale.
Exactly. That's the tension with your role, is some markets are so hot, and of course there's demand, but finding space is going to take a long time. Yeah.
Yeah. And again, I think that's part of where we're able to advise people and go, look, I wouldn't do a deal here, and these are the reasons why. And a lot of people don't like it, right? Because they want to open up now, and they just are super eager, which I love that side of it. But at the same time, if you do the wrong deal, you're going to be in a lot of trouble.
Yep.
And so that's what I love about being able to collaborate with you, is because it's a perfect mix of understanding the art and the science. It's a perfect mix of understanding, the initial foundation of the real estate deal, the initial foundation of what your business proposition is, with then the ongoing day-to-day business, right? You've got to take all those things into account. And I think often people don't do that because they think it's easier than it really is. And I mean, that's what you and your team get to really get people to understand, is this is not an easy role, especially if you don't have the right business model.
Yeah. Yeah. I mean, it's funny working with you and with Nick like that. I sent a note back to the group in Michigan, and I was like, this is the process you need to follow. And, the three of us talk a lot about sort of it's like you got to do it right or not, or, I need to work with somebody else. I don't want somebody who's not willing to go through the process and not willing to get it right. Yeah. What else?
And so, I mean, I think I, I think the next 12 to 18 months are going to be not difficult, is not the right word, but it's going to continue being a resetting and a pivoting and a re-strategizing for all parties involved, right? As we're going to continue to see the enterprise user evolve and figure out what it is they really are needing and wanting, because they don't today, right? They want us to figure it out as operators, as advisors, but really they have the pieces to the puzzle that we don't. So we'll continue to see the enterprise. We'll see hopefully the financial markets will come back around, interest rates will come back down. Because right now,
I don't know about interest rates. What if they don't?
well, I mean, we're in a lot of trouble. We're in a lot of, deals that made sense 6 months ago don't make sense today, right? And I'm not talking about, I want to be very clear, I'm not talking about they're going to go back down to where we've seen them. I don't think we'll see those interest rates in our lifetime, but
No.
certainly a point or two will definitely help from the standpoint of being able to get these deals financed. And even not only the actual deals from an ownership standpoint, but even from a build out standpoint. I mean, you look at some of these people that have taken SBA loans out and they're now paying 9 and 10%. I don't know how you make those numbers work, right? And so
numbers work. Yeah. So, yeah.
people are having to show up with more equity, more capital to lower that debt ratio. And so you've got that side. You've got landlords that are up. I mean, depending on the market, there's some serious headwinds with, I mean, even if we just looked at the fact that leases are going to get spaces are going to get smaller, right? People are going to contract because their people aren't coming in as much. And so
traditional leases.
Yes, correct.
Yeah.
And then the fact that they're going to get I don't think some of these traditional users will come back and take traditional space. They're going to be looking at flex space, whether it be spec suites or, some type of co-working.
Yeah. That's what I think will be the tension for the next, to your point, year, 18 months. It's like, I think the demand is going to continue to go up. So like Beth Moore, posted about like, I need an operator in Palo Alto. She's like, we need quality options. Palo Alto is a really tricky market. And, she probably realizes this, but having operated in that market, it's hard to make that pencil. So it'll have to be some sort of creative deal if she's got space that she wants an operator to take. But right, so the demand is there, but can you get the deal done? Can you get the construction done? Can you kind of put all the pieces together? But there's opportunity. Yeah. I think, in times like this where there are a lot of challenges, there's also opportunity in there too. I mean, the WeWork locations are an opportunity. There will be some operators that get in there and expand their footprint, right? And can make it, the right ones can make it happen. And there'll be some.
Yeah, I think there's opportunities on all fronts, right? There's opportunities on the operator front because there's going to be opportunities to take advantage of space that's going back to the market. I think from it's service advisor, we haven't even touched on that, right? What are JLL, CBRE, Colliers, all the way down to, the individual service providers like myself. How are we taking advantage of these times, right? Because everyone's looking to figure out what their strategy is moving forward. And so I think, we've seen groups like Colliers. I think they've been speaking about more, right? They've been through 3 or 4 different flex people to help them, and they have been able to figure it out. And, obviously I came from AY. So you've got that whole platform. You've got JLL Flex that is slowly falling apart as well. RE, same thing. HANA went to Industrious. And so I think everyone's kind of trying to figure out how to service the industry and what that looks like. And, so you got that side's going to continue to play out. And then, these landlords are going to have to figure out how to continue offering more and more flex with spec suites, with whatever kind of other flexible workspace offerings they have. but I think it's exciting times. I mean, it's obviously,
Like a challenge. You're an 8.
but it is scary times, right? It is scary times for people, especially people that have space that's coming back. I mean, I talk to landlords that are having a lot of anxiety over, what's going on. But
Well,
we've
and
seen,
I think, just on the landlord piece, I think certainly a lot of these landlords are giant institutional landlords, like the Manhattan landlords. But,
yeah,
we worked with a group, super nice people, like normal people with dogs and kids and, and it's like, I think people dehumanize, the asset owners sometimes. And some of these folks are like real people who just got really unlucky.
yeah.
Yeah.
Yeah, and I mean, I think that's just it is, I mean, there's real human people making all these decisions, right? And I think going back to the enterprise side, that's what I see, 20 years in the business, 10 years of on the retail side, and then 10 years on this side. The real estate managers inside of these enterprises are afraid to make the wrong decision, right? And so they are paralyzed by that fear, right? Is because if they do, that's their jobs, right? And so, we're even seeing that side of it, and that's why they're kind of passing the baton on to someone else to be like, y'all make the decision as to what we want to do. And so I think we just have to continue coming together and figuring out, what the best way to collaborate as a whole to really figure out what we have moving forward, which is why, as I've, dedicated the second half of this year to going out and speaking at Cornet, both in Dubai and in Denver.
Oh,
Why?
the Giovanni Roadshow.
Yeah, why ULI in Northwest Arkansas, and how do we continue doing? Because my goal is, how do we, as quasi use the word influencers, advisors in the industry, bring different parties to the table? Because right now, as you look at GWA and Juicy, we don't really have the enterprise users there. Not really, we don't, right? And as you look at Cornet, there's a few of the big operators there, but the smaller operators, the mom and pops, the regional groups would really make up the core of what the flex industry is, aren't at those parties either, those conferences. And so we need to bring all those parties together in some way, shape, or form to be able to have these big conversations.
Yep. Okay, speaking of dogs, you're on the road. Who has Guido? Mom?
My parents are taking care of Guido.
No, we're about to leave, and we had suitcases in the living room, and I could tell Louis was like eyeballing the suitcases, like, I know what you're up to. I don't like it.
Oh, he knows them. He knows the minute I take out a suitcase. It's interesting how smart they are.
Oh, totally. I already missed them. I don't think my daughter's prepared to be gone. We're going to be gone for like 10 days. I don't think she realizes she's going to miss the dogs.
She'll be just fine. The beauty of it is he'll come back and they'll be super excited and stoked to see you, just
I
like
mean, they're super
the
excited when
mailbox.
you're at the grocery store.
Yeah,
That's the best thing about dogs.
yeah, for sure.
Uh,
Well, I think we covered a lot of good stuff in this conversation. It's, by the time this airs, who knows what other
totally right.
headlines will pop up. So
We should do these more often so we can put them up and stay relevant. Yeah. Okay. Well, yeah. Enjoy gonna do some hiking this afternoon.
yeah,
Yeah.
I'm living the remote work model.
You should check out some co-working spaces while you're there.
There's actually two that I've been less than thrilled about having conversations with.
I see. Yeah, I'm going to London next week, and I haven't negotiated yet my afternoon of touring. So I have it like of a placeholder in our Excel spreadsheet itinerary.
Of
But
course, you have a spreadsheet. Oh my gosh,
spreadsheet.
Jamie Russo.
Well, you know what? For as like type A as my husband is, he's a terrible planner. Like he's just like, okay, now what? So I had to make some plans. So I think I'll send him and my daughter out on an afternoon, and I'll get some co-working visits in. So I gotta
I mean, no better place than London, right?
I know that's the thing. I'm like, I can't go and not see at least a few spaces. I'm looking forward to
Yeah,
that.
for sure. Good.
All right. We'll catch up again soon. Thanks, Gio.
Yeah. Thank you.